You clicked this video because you want to make $200,000 a month on Wall Street, but you're terrified of picking the wrong path and ending up as another burnt-out 24-year-old who hates their life. Most people think investment banking is the only way to get rich, but on the street, we call that the golden cage. There is one specific career path that looks the coolest in movies, but has the highest regret rate in the real world. And there's another hidden path that most people haven't even heard of, one that pays nearly the same, but actually lets you sleep 8 hours a night. I've spent the last few weeks digging through every major Wall Street careers video, cross-referencing the real compensation data and the actual day-to-day schedules published by people at firms like Goldman Sachs and Citadel. I've analyzed where the happy millionaires actually go versus the ones who quit after 6 months. By the end of this video, you're going to know exactly which of the 7 major Wall Street careers fits who you already are, ranked not by prestige, but by personality. Because if you get this wrong now, you won't just lose an internship, you'll waste your entire 20s chasing a dream that turns into a nightmare. Let's make sure you pick the right one right now. Let's start with the one you've all heard of, investment banking. Most freshmen think IB is like the Wolf of Wall Street, throwing parties and shouting at phones. It's not. Think of an investment banker as a high-stakes architect. You aren't picking stocks. You are building the complex blueprints that allow giant companies to merge, go public, or buy out their rivals. But here is the famous trap. Every campus recruiter will show you the $170,000 starting salary, but they won't show you the banker's diary, an internal system that flags you if you work over 100 hours. Do the math. $170K sounds like a lot until you realize you're working 100 hours a week, 52 weeks a year. That's roughly $32 an hour. I've seen Manhattan Uber drivers make more than IB analysts, and they get to see their families. This path is only for the ones who don't mind missing their best friend's wedding because a managing director changed a font size at 11 p.m. on a Friday and needs it back in his inbox by midnight. So for prestige, it's an easy S tier. Everyone will be impressed. For sanity, dead last F tier. But exit opportunities, the best on this entire list, survive 2 years and every other door we're covering today opens automatically. This path is only for the perfectionist. If you get a thrill from making a 50-page PowerPoint look flawless, you'll win. If you crave excitement and hate spreadsheets, this cage will kill your soul. It's a great gatekeeper job, but don't expect to have a life for the first 2 years. But what if you hate PowerPoints? What if you have zero patience for font sizes and just want to gamble with millions in real time? Then you belong on the floor. Let's talk about path number 2. Then welcome to sales and trading. In investment banking, you spend months building a single deal. In sales and trading, you have 3 seconds to decide if you're going to buy $50 million worth of Apple stock before the price moves against you. I call this role the market's heartbeat. You aren't an architect, you're a sniper. Here is the banger insight that most people miss. The stress here is higher, but it's shorter. When the market bell rings at 4 p.m., your day is over. There are no 2 a.m. calls, no working through your best friend's wedding. If the market is closed, you are free. But don't get it twisted. This is not for everyone. You need to be an extrovert who can handle being yelled at by a client while losing $1 million of the firm's money and still have the stomach to go to lunch 10 minutes later. So let's rank it. For prestige, B tier. The architects in banking think they're smarter than you. For sanity, solid A tier. You actually get to see the sun. For exit opportunities, B tier. The skills are specialized, so your options narrow over time. If you were the kid in high school who loved sports and hated sitting still, this is your home. But what if you're not an extrovert? What if you're a math genius who wants to beat the market using code instead of charisma? That requires a different kind of wizardry. Let's talk about path number 3. Welcome to the world of the quant. On Wall Street, these are the only people the investment bankers are actually afraid of. Quants are the wizards of Wall Street. They don't use pitch books or phones. They use Python, C++, and advanced physics to build the machine, algorithms that find tiny patterns in the market and exploit them for millions of dollars in seconds. This is the most meritocratic job on earth. In banking, you get promoted if your boss likes you. In quant trading, you get promoted if your code makes money. The computer doesn't care who your daddy is or what suit you're wearing. But here is the warning. The barrier to entry is the highest on this list. We're talking F-tier difficulty. If you didn't live for AP calculus or spend your weekends coding, don't even look this way. You are competing against math Olympiads and literal rocket scientists. Let's rank it. For prestige, S tier, among people who actually know how money works. For sanity, B tier, 50 hours a week, but mentally it's chess at grandmaster level every single day. For exit opportunities, B tier, your skills transfer to tech and data science, not just finance. If you have a code-blooded brain, this is the highest-paying technical job in the world. But we haven't reached the final boss of finance yet. What happens when you combine the deal-making of a banker with the high stakes of a trader? You get the endgame. Let's move to Act 4. Now we reach the final boss of the street, the place every junior banker prays they'll get recruited to: private equity. If investment banking is being the architect who draws the blueprints, private equity is being the owner who buys the whole building. Think of it like flipping a house, but instead of a kitchen remodel, you're buying a billion-dollar company, firing the lazy management, cutting the fat, and selling it for a massive profit 5 years later. Here is the banger insight that changes everything. In every other job we've discussed, you're paid a salary. In PE, you're paid in carry. That's a fancy word for a slice of the profit. If the firm makes $100 million on a deal, you don't just get a bonus, you get a check for $2 million straight to your personal account. This is how 28-year-olds on the street buy penthouses. But don't think for a second it's easy. The entry difficulty is dead last, F tier. You have to survive the investment banking meat grinder first, then outcompete every other genius just to get an interview. And once you're in, it's move up or move out. There is no room for average here. You are either a killer or you are gone. Let's rank it. For prestige, undisputed, S tier. For sanity, D tier. 70 hours a week and your skin is always in the game. For exit opportunities, S tier. Once you're in PE, you can go anywhere. If you want to be the person who owns the game rather than just playing it, this is the end game. But there's another world where the money is just as fast, but the rules change every single hour. Let's look at the market snipers. If private equity is about playing the long game, hedge funds are about the right now. Welcome to the Wild West of Wall Street. Think of a hedge fund manager as a market sniper. You aren't buying companies to fix them over 5 years. You are betting on anything that moves: gold, oil, tech stocks, or the Japanese yen. You find a target, you take the shot, and you either win big or you bleed out in public. Here's the banger insight on the money. It has the highest variance on the street. An analyst can make $200,000 or $2 million. It all depends on your P&L. In 2022, Ken Griffin made $4 billion personally. That's 4 times the entire economy of some small countries in a single year. But here's the reality check. Your job security is a dead last F tier. Some of the smartest people on Wall Street have been seen crying in a bathroom stall because they lost 5% of their fund's money in a single afternoon. If you don't perform this quarter, you don't get a wellness check like in banking. You get an empty cardboard box for your desk. Let's rank it. For prestige, A tier. For sanity, C tier. Great hours, but holding a live grenade mentally for 8 hours straight. For exit opportunities, C tier. Your skills are highly specialized and don't transfer easily outside finance. If you have the stomach for pure risk, this is your home. But what if you want the lifestyle and the money, but you'd rather talk to the next Mark Zuckerberg instead of staring at a red and green screen? That leads us to the most relaxed path in high finance. If you want the Wall Street title without the Wall Street smell, you go to venture capital. This is the only job on the list that actually feels like a startup. Think of a VC as a trend seeker. You aren't fixing old companies or betting on oil prices. You're hunting for the next Facebook, Uber, or SpaceX. Your day isn't spent in Excel. It's spent in coffee shops and boardrooms, talking to founders who want to change the world. Here is the banger insight most freshmen miss. VC pays the least amount of money early on. You'll earn significantly less than an investment banker for the first 5 years. Why? Because you're trading cash for lifestyle. You work 50 hours a week, you wear hoodies instead of suits, and you actually have a soul at the end of the day. But getting in is notoriously hard, not because the math is tough, but because there are only a few hundred seats in the entire world. Let's rank it. For prestige, A tier. For sanity, S tier. The most human job on the street. For exit opportunities, B tier. You can move into startups, become a founder, or join a portfolio company, but it doesn't transfer back into traditional finance easily. But we've covered the famous roles. Now it's time to close the loop. What is that hidden path I mentioned? The one that pays like banking, but lets you live like a normal human. Let's reveal role number 7. Finally, we've reached the hidden path I promised you at the start of this video. The one the smartest seniors on campus are keeping quiet about. Welcome to private credit and corporate development. I call this role the balanced realist. While the investment bankers are losing their hair over font sizes at 3 a.m., the people in private credit are doing nearly the same work, but they're leaving the office at 6 p.m. to go to the gym. Here is the banger insight. Private credit has grown from $500 billion to nearly $2 trillion in under a decade, and most undergrads have never heard of it. Instead of building blueprints for deals, you're the one providing the raw cash companies need to grow. High 6-figure salary without the 100-hour week meat grinder. In corporate development, you're working inside a giant company like Google or Disney, helping them buy other businesses. You get the prestige of a massive brand name on your resume, but you have a normal social life and a predictable schedule. So, let's rank it. For prestige, B tier. You won't be the star of a movie. For sanity, undisputed S tier. For exit opportunities, A tier. Private credit experience opens doors to every major asset manager and bank within 3 years. It's the highest happiness to dollar ratio on the entire street. Now, we've covered all 7 players. It's time to see which one matches the person looking back at you in the mirror. Let's look at the final matrix. Most of you will spend the next 4 years chasing the role with the most prestige. Don't. The data is clear. The money is only worth it if you have the sanity left to enjoy it. Now you finally know which career fits your personality, but knowing the job is only 10% of the battle. There is one specific thing that will get your resume thrown in the trash before a human even looks at it, and it's a mistake 95% of freshmen make in their first semester. In the next video, I'm going to show you the exact networking blueprint that gets people hired from non-target schools. Subscribe so you don't miss it.